Welcome to this channel's first video of 2023. I'm going to do my best this year to put out a video, at least one video out every week. And it's all going to be based on precious metals, what's happening in the market, what's going to be driving prices and what has driven prices over the few weeks and months as we trend throughout the year. Today's agenda, this is quite a short presentation. So I'm going to be showing you how gold has performed against the average UK house, also gold's 2022 performance against other commodities, and also the G10 currencies as well. And I'm going to be talking through some important key events. And this presentation is actually going to highlight some really interesting things, because I'm reading a lot on Twitter and other platforms that a lot of gold and silver investors are really disappointed with the performance of the precious metals. Everyone knows in nominal terms how the precious metals have performed, because you can easily call up a chart online and you can see that most of the year was spent trading pretty much in a relatively tight trading range. There was a lot of consolidation when other markets were going up. Gold was consolidating, and I think that that's why the precious metals sector of investors are quite disappointed with the performance.
Orunum is a bullion company headquartered in central London, supplying low premium bullion and rare world gold coins that are not seen elsewhere. Orunum publishes market intelligence for gold investors, including free weekly downloadable reports that explain how the metals have performed against other commodities and currencies. An interactive gold heat map is available on the Orunum website, with a live view of how gold is performing against every currency in the world. Free online courses are also offered, featuring topics such as why prices rise over time and why the UK sold half her gold reserve at multi-decade lows. Visit the Orunum website for full details.
So here we have a chart going back to 2005. So there's a company that specialises in mortgages, in house mortgages, and in the UK. And what they do is they publish each month. They publish the average price paid for like a median house. So the average typical UK property, they record it, and it's sort of like an index. And what I've done is I've taken that data and I've looked at the gold price at the time, and I've said, right, how many ounces of gold would it take to buy that house? And I've tracked it throughout time. And this is really important, because I hear and I have done for years now, people saying that UK houses are at all-time highs, they're in a bubble, the house price is going to crash, and lots of people have been mentioning that. And you have to say that I from this I don't agree. In 2005, I would have been able to buy a typical average house in the UK for just less than 700 ounces of gold. I can buy that same house now for about 115, 120 ounces of gold. So in terms of gold, house prices in the UK have performed very bad. So house prices are quite cheap compared to gold relative to where they was back in 2005, and even all the way to 2010. The prices was in decline, so house prices were in decline against gold. And I'm pretty sure that if you've done this exercise across Europe and also the US, you would get a similar picture. Yes, house prices have been appreciating in nominal terms, but when you weigh this against how they've performed against gold and other commodities, they haven't done so well. So actually, I think that property potentially is better value as an investment theme than people realize. So this is a calendar year performance. Gold against some of the other commodities that you can trade. You can open a contract for difference account, and you can trade natural gas, cocoa, soya beans, and things like that. So what I've done is I've taken the closing price of each of these spot contracts from the beginning of January 2022 until New Year's Eve 2022. And this is how they've performed against gold. And you can see here that palladium and cotton are the only commodities that done worse than gold. So gold has appreciated against palladium and cotton. Palladium done very well for years, and it's been sort of in decline ever since. So the market is correcting. Other commodities, they have performed better than gold. So this does add some weight to the argument that gold has underperformed, at least in the calendar year 2022. Natural gas was the winner, really. It's been a massive issue in global economies, energy prices. So that's no real shouldn't be a surprise to anyone. But you've got the agriculturals as well, so the grains and the softs, so sugar, corn, soybeans. They've all beat gold's performance by about 10%, other than sugar. It was about 5-6%. So this is really interesting to see because this is in relative terms gold's performance against other assets. When we look at the calendar year performance, gold against the G10 currencies, you can see here that gold performed very well against these commodities, these currencies. So there was even a small gain against the US dollar at the end of the year. But you can see that the big fallers was, and this surprised me because I didn't realize that the Sweden Corona was actually the worst performing out of the G10. I thought the Japanese yen was because of the cap, the yield control that the central bank's doing there, and the pound, where I'm from, Great British Pound, it's had a dire performance because of lots of reasons. But you can see that gold did gain in fiat currency terms, and this is probably all off the back of the fact that yes, central banks are raising rates concurrently in the West, but they are doing it at a slower pace than inflation is accelerating. So the real interest rate is still deteriorating in gold's favour. So even though yes, people are a little bit disgruntled with how gold has performed, it has performed quite well against the currencies at the very least. It hasn't performed well against other commodities. And just quickly, so what have we got to look out for? So we've got some central bank announcements. The last day of January over to the first day of February, we're expecting a rate increase from the Federal Reserve. At the moment, that's looking to be a much smaller rise. I'm seeing 25 basis points as a whisper number. The 2nd of February, we've got the European Central Bank announcing their policy decision and also the Bank of England as well. 12th of January, we've got US consumer price inflation or consumer price index, which will be sensitive to the gold price. Gold will move off the back of that. And also we've got UK GDP on the 13th of January. So that concludes this presentation. Make sure that you subscribe. The presentations will be put out every week this year.